Good day, everyone. My name is Lukman Owolabi, and we are talking insurance today. President Bola Ahmed Tinubu recently signed the Nigeria Insurance Industry Reform Act into law. The new law repeals the Insurance Act of 2003 and consolidates several outdated insurance laws into a single modern legal framework. The act is aimed at accelerating the nation's movement towards a $1 trillion economy by year 2030. The Act centers around six major planks. 1. Tougher licensing rules for insurance agents and prescription of heavy sanctions for unlicensed insurance businesses. 2. Recapitalization of industry players to ensure sound financial health of operators. The last recapitalization exercise took place in 2007. 3. Strengthening enforcement of compulsory insurance policies to enhance consumer protection. I'm particularly delighted about this. 4. Digitization of the market in order to improve access and efficiency. 5. Enforcement of prompt claim settlements and establishment of dedicated policyholder protection funds, especially in cases of insolvency. 6. Participation in regional insurance schemes, especially the ECOWAS Brown Card system, whereby you can make claims from incidents that occur while driving within the ECOWAS sub-region. So, as earlier hinted, the main focus of my intervention is the enforcement of compulsory insurance policies, which is already being misrepresented by some people. First off, compulsory insurance is not a tax. It's a social imperative that is necessary for public protection. For further elucidation, compulsory insurance in Nigeria consists of a class of insurance policies made mandatory by law with the objective of providing protection to third parties and the general public. In essence, making the policies compulsory is important because of derivable social utility. Let me try and put it in proper perspective. If we dissect the insurance policies designated as compulsory by government, we can easily deduce that they are public liability insurance policies, all geared towards protecting the third party from consequences of actions that they know nothing about, which could materialize in form of death, bodily injury, or property damage. Invariably, the main aim is to secure benefits of insurance to people that would normally not benefit in case of a loss. Just imagine a driver hitting your car and thereafter starts begging for forgiveness. Meanwhile, what is expected in that situation is for him to activate his third-party motor policy in order to fix your damaged car. That's the reason motor third party is made compulsory, and it is the minimum motor policy prescribed by law. Same goes for insurance policies covering buildings under construction that are above 2 floors, and also buildings that the public have access to, like schools, hospitals, cinemas, tenements, business premises, hotels, recreation centers, oil tankers, and even hostels. Insurance policies relating to each risk ensures that the third party affected by accidents from any negligent act is adequately compensated. It is also pertinent to state that compulsory insurance policies are not a creation of the new Reform Act. It existed in the now repealed Insurance Act of 2003. The scope has only been widened to include similar risks in form of oil tankers and petroleum and gas refueling stations. There's also a special emphasis on enforcement, with non-compliance attracting up to 1 million naira fine, 1 or 2 years jail sentence, or even both. The National Insurance Commission, NICOM, is also now fully empowered to administer and implement provisions of the Act in such a way as to restore public confidence in insurance, attract investment, and accelerate insurance penetration within the country. I shall be breaking it down further as occasion demands, but for now, do have yourself a wonderful day.